This is our Forex blog for May 24th, 2012, and this may be one of the best Forex blogs we've ever done, as I'm going to showcase one of our new tools in action and how to use all the different things that we teach: support resistance, position sizing, Fibonacci retracements, profit targets, and judging what the likely profit target is and using that to decide whether to take the trade based on the real-time statistical momentum. First of all, we use the currency meter. We're comparing every currency to every other one on multiple time frames. On the top, we have 5 different tools that come up with this histogram. 3 of them measure the direction the dollar's moving, in this case, versus all the rest, and 2 of them measure the intensity. So anytime it's at or above the 80 level in green, it's extremely strong. Red, extremely weak. Underneath that, we have the 15-minute trend, hourly, daily, weekly, monthly. So anytime the majority of the trends are up, as it was earlier in the day, you want to trade the dollar by buying it against the weakest one. At that time, let's scroll some of these back. You can see that the Swiss was extremely weak at that time, and that means during that time you want to be looking for buys in the dollar Swiss. Now, one of our features in the software is new signals that let people decide when to take trades. First, you want to use the currency meter to find the strongest currencies. And, in this case, the daily trend's up, the weekly trend's up, the monthly trend's up. It had been up yesterday way above the green 3.0 band, which is a very high probability reversal area. It pulled back last night, rallied up, didn't take those highs out. And then on the way down today, it wasn't able to take out these lows. So, when you saw it around 330 being one of the stronger ones, when it goes above the hourly, you might consider a buy. You might also have taken this buy right here at the low once it tested the low. But if you miss that, you see this nice little reversal pattern right here, which when it's in the direction of the trend and it breaks out and the bar closes up, we go to put a buy signal here. So in this case, if you missed the obvious breakout from below to above the hourly here at 49, you would get in this trade here at 62. Here is the resistance area. The previous day's high. It's pretty likely to run into some resistance there. So you get into a trade, you made a quick 10 or 12 pips. Now, usually at the upper containment bands, price will reverse, and that's exactly what happened. Previous day's high right here is the support area. You might have considered buying this right here, and it failed to go up. You can see on the way down it didn't have that much weakness, so you would have got into that trade. You would have had a small loss. And most of the time I draw, after a market move makes a big move up above the bands, it usually makes a 2-wave pullback. So you draw your fibs on here. And this is where, getting into trades based on Fibonacci profit targets. If you have any buy signals at these levels right here, which in this case we didn't, so we didn't take the trade. Once the weakness kind of runs itself out, this pullback trade right here, you're in at 54. Typically, if it starts going up and you get a wick at the top, it's a reversal pattern. You move your stop up, you exit with 5 or 6 pips. And this, after you get a deeper pullback, this buy signal right here, you're in. I would have probably got out with about 5 or 6 pips as it came up to the hourly and had a hard time getting above it. But now traders have entry signals that, when combined with support resistance, in other words, this buy signal right here is not very good because there is major sell area, the previous day's high, right above it. You only want to take a trade when you have a good chance of making 15 or 20 pips. In other words, the next support resistance area, whether it's the previous days, weeks, or months high or low, daily, weekly, or monthly pivots, or the white upper containment band, are all excellent areas to judge profit. Now, one of the other new features we have in the software is the ability to link charts together. You can see there's a black chart behind it, which is a placeholder chart. I have it as the same color as the other ones, red, and it is set to A. And then when I create a quote sheet or hot list with the same color, red, and sort them, it's going to show the strongest to weakest. So you can see the dollar's the strongest, the pound's the second strongest, the Swiss and the CAD are the weakest ones. Right now, a dollar CAD would be the one you'd be focusing on if you're looking at the hourly trend strength. 100% of dollar pairs are above their hourly moving average, and 100% of CAD pairs are underneath it. So you bring up the dollar CAD, and you would have seen this a little bit ago. You see this buy signal right here? first of all, it didn't have off the charts momentum. It had a very high percentage of dollar pairs going up, CAD pairs going down, but without too much intensity. Trends are made up of the direction times the intensity of the direction. In this case, it was going up relatively weakly. So, I might not have taken this trade myself, or this one, or this one. But once it breaks out and makes a higher high, you got a nice little buy signal right here. You're in at 71, and you always want to draw your fibs on that wave right here. And getting out at the 1.618 is a good place to get out. You made 16 pips. Now, a lot of traders might think 16 pips, that's nothing. I want to make 30 or 40 pips a day. And those traders, for lack of a better term, are idiots. They've never traded before. They have no idea what you can do with your account by just getting 10 pips per day. So let me just show you. If you're one of those traders that thinks you need 30 pips a day to do well trading, you're about to be educated. $2,000 account, getting 10 pips per day. That's 50 a week, 200 a month. Your $2,000 account after 2 months, 8 weeks, it's pretty much doubled. Now, I'm not incrementing this, it's incrementing by 0.1 lots at a time. After 8 more weeks, that account has doubled again. After 8 more weeks, it's doubled again. You've got a approximately $18,000 account. Your account's grown 9 times. You're doing 3.6 lots at a time here after 24 weeks. And obviously, at the end of the year, your account's 258,000, starting with just 2,000. So 10 pips per day will explode your account. So by being very picky and picking, the best currencies, for example, and you might have, if you're watching this currency and you see that the daily trend's up, the weekly trend's up, the monthly trend's up, you see that it has a nice little wedge pattern forming right here. You can see high, higher high, high, lower high. Volatility is getting smaller and smaller. That pattern breakout, when you spot those, is very high probability. Experienced trader watching this might have got on here at 60, but once you saw this buy signal right here, you stick with it a little bit more, and you made another 10 pips on there. So instead of making only 16 pips, you made 26 pips by knowing a little bit about patterns. But the currency meter would have had you watching that way before that. Now, right now, the weakest one is, the strongest one's the pound. This is not a chart that I normally leave up, but we'll bring up the pound CAD chart. This has to download take data, and it's going to put the range bars on the chart, and then we'll put the patterns on it. Oops. Sorry about this. All right. So I'm going to call these patterns, and they're probably going to be released tomorrow. FX trade signals. And this is just the first rough draft of releasing this to our traders. So here's an entry in this one that you have. Once you know a currency to be looking for buys, you wait for these patterns. And you don't buy it when you see this pattern. You really want the price to go 1 pip above the bar's high. You get in, draw your fibs on the last wave up to get an idea where the fib target is. And in this case, it tagged that level. I always myself get out of half the trade here, but you can see it went up 10, 20 pips. That's 2 days worth of profit with just one trade here. And you can see, because the longer term trend of this one is up, for the most part, most of the buy signals here, this one here failed, this one here, went up, you would have had a break even, this one here made a few pips, this one here, made a quick 20 pips. And a lot of times if you see buy signals and price kind of runs out of steam, you have a nice little flag pattern or wedge pattern right here. You might also decide to take a trade right here from seeing the previous pattern. And if that's the case, you usually draw your fibs on there. You would have got out of that trade here, got back in again here, and made another 20 pips. So these patterns, when you don't see any sell signals, but you see buy signals, it looks at the longer term daily, weekly, and monthly trend right here. And if the daily, weekly, and monthly trend are all up, if it makes a big enough move down, you start seeing some buy signals here near the lows. Normally we're only looking to buy above the hourly, we're looking to sell underneath it. But when all the time frames are in one direction, you start getting the circles on your chart, which are counter trend trades. If the counter trend trade is in the direction of the longer term trend, you might want to be aware of those trades and take them. This one here earlier in the day, even though the trend was down at the time, intraday, the longer term trend was up. So this reversal signal, you would have got in here at 46, and if you used our trailing stop, you got out here at 73. As you can see, by using the signals, it takes a lot of guesswork out, especially for new traders. It may not, be able to look at the 26 different things that these signals are looking at in order to identify themselves. Obviously, the Swiss was extremely weak today, and earlier at that time, you can see that New Zealand was strong. So let's bring up the New Zealand Swiss. Alright, this is going to come up, then I'm just going to put the buy signals on it. So you're looking for buys in this one. Obviously notice, buy here, that one made a little bit, this one here probably would have lost, this one here is break even, this one here made a ton, it went up 10, 20, 30, 40, 50 pips. Notice the counter trend signals do a great job of alerting you that you might want to get the hell out of this trade. Also, this first wave up here where it went sideways, you always want to draw your fibs on there. And, anytime you see a fib target level with a counter trend sell signal, unless you're stupid, you want to be getting out of this trade here. And if the longer term trend was down, this would be an excellent place to do a quick little counter trend trade. Then you got another counter trend. You got another trend trade. Trends are showing triangles. Counter trend signals show the circles. So, if you got into this trade right here, you might have had a loss. It goes sideways a little bit, breaks out again right here at 10, and it goes up, and you got a counter trend signal up here. You made 15 pips. So in a lot of cases, you might lose 10 pips and make 15, and you can see there's no buy signal here. Maybe it's up statistically too much, and the odds of a big move after that is pretty low. You always want to draw your fibs on there. And you can see a sell signal right here at the top. Anytime you have a sell signal at a fib target, it's a very high probability trade, and most of the time it's going to make you a profitable trade, whether it's only 5 or 10 pips or sometimes 30 pips. It remains to be seen. Counter trend signal right near the half level. Whole and half numbers tend to have big sell orders. This thing was going up, 1 wave, 2 waves, 3 waves. This is a 4th wave up. It's very likely to reverse up here. This is one of those things where you can, especially if it's above the upper containment bands, especially if it's above the upper 2.0 white band, which I'll put on the chart right now. This is not a currency I normally trade, so don't have it running overnight. It's above the white 2.0 band, it's very likely to reverse. And as you can see, it's way above the 2.0 band. Most of the time, price never really goes nor stays above the 3.0 band. So we'll just, since it's way above the 2 band, it's probably also a little bit above the 3 band. I like to have these as green on my chart. And it is. It's way above there. So this is one of those things where you can really do a big counter trend trade. And, as it's coming down, I'm watching it. I would have been out of this trade right here as it went sideways. You don't know if it's going to continue down or not. You're out at 20. You're in this trade up here at 45. You made 25 pips on the counter trend trade. So anytime you see these counter trend signals at fib targets, and it's gone up, at least 3 or 4 or 5 waves, look for some counter trend trades too. You use our systems to trade with a trend, and when the market moves statistically too far, you do counter trend. It's that simple. And one of the things that I do that you might want to play around with very tiny lots at first. If I have a loss and I have a very high probability trade, a lot of times I'll do 30% more lot size on the second trade. If I have another loss, I might do 50% more lot size on that one. I rarely have, knowing my own stats, 3 losses in a row. So, that's a system that works well for me. I would not do that if I was you, if you're a brand new trader and you don't know what you're doing and you don't have a good 60 or 70% or higher win rate on your trades. But for experienced traders out there, you might want to play around with that too. With these signals, you can see this trade here made money, this trade here a little bit, this one you lost. If you got in here, you lost. The third one, guess what? Exploded up. If you would have had, let's say 1 lot here, 1.5 lots here, 2 lots here, you made 60 pips on 2 lots. That's $600. And you would have had, maybe let's say 10 pip loss here, $100 loss, $150 loss, so you have $250 in losses, and then $600 worth of wins. You're up $350 on 3 trades, even though you're right 1 out of 3. So this is a perfect example here of why I personally have been doing that for the last few months.